All right, thanks for joining us today. Happy Friday to you. I'm Arlen Boulding with you, your tour guide to the ag commodities. So glad you could join us today. It's a short trading week, but man, is it an adventure-packed trading week. That is for sure. I want to welcome aboard Brian Hoops. He's with Midwest Market Solutions in Springfield, Missouri. And we'll talk about some developments overnight, and there's no shortage of things to talk about. Brian, Tammy mentioned earlier in the broadcast that we had a big sell-off in the grains, and I do want to take a look at some of these prices here. Now, there is just a little bit of an asterisk that we need to put on these prices because they closed on the Globex trade right after we got the weekly export sales numbers this morning, correct?
That is correct,
Okay.
Marlon. Good morning. Yes, sir.
So let's take a look at what we had on the close, just to review for everybody in case they just tuned in. So let's take a look first at the corn market, and our quotes are from bar chart. Yeah, September was down 21 cents overnight. December was down 20 and a half. Barely hanging on to that $6 mark at $6.25. Meanwhile, in the soybean trade, well, you had the August down 25 this morning. Look at September, down 31 3/4. November was down 34 cents at 13.05 and a half. Holy smokes, they're getting close to putting a 12 handle on that thing. In the wheat market, we had September Chicago wheat down 16 and a half at 736 1/4. Now in Kansas City, we also had weakness. We had September down 15 3/4 at 856 3/4 after we've had a little bit of a rebound in the middle of harvest. Now on Minneapolis wheat, well, let's see. All right, we can go with that. That's down 4 3/4 on September at 879 3/4. So, Brian, I want to take a look at these weekly export sales numbers and get your opinion on if they're tied to this drop in the prices. On the weekly export sales, we had corn coming in at only 83,100 tons, soybean 626,300 tons, and I'm combining both marketing years here. The wheat only 123,900 tons. What did you think of those?
So, yeah, the corn number, it's pretty dismal. Even looking at the combined marketing years, you're still less than 4 million bushels both years combined. It's a really poor number, and we don't expect that that's going to improve any as we go in through the rest of the summer. Brazil's Safrinha's corn harvest is just getting started and ramping up, and they are going to sell a lot of corn into the world marketplace, which will undercut U.S. corn prices. It's going to hurt basis levels around the U.S., around the world. And so our exports, I don't think we're going to improve, especially as we have corn prices rallying this time of year. Now, we dipped overnight. We dipped yesterday. So you look at the correction that we've had from Wednesday's highs around 6.29 to the $6 mark here. We're about 29 cents, 30 cents off of those highs. Well, if you go back to the last major correction we had, which was when we were trading about 5.48, we corrected to 5.20, so about a 28-cent correction. So these are very similar corrections, in the dollar amounts. The question will be is, can this $6 mark hold? And same thing for soybeans. Can the $13 level hold on the new crop? We've priced in a lot of rain that's coming into the Midwest this weekend. And if those rains are a bust, we certainly should move back higher. There's also been a lot of talk about the Fed raising interest rates again over the last 2 days. That has pressured a host of commodities, gold and silver and crude oil, all dropping while the dollar rallies. Now, those markets are starting to recover into the morning hours. Hopefully the corn, soybeans, wheat markets can all find some sort of a early morning support here around the 8:30 opening and then start to rally once again going into the mid-session. Otherwise, we're going to look at a real dismal end of the week after a very robust start to the week.
Interesting turn of events here in a couple of days. Now, Brian will come back in a moment, and we'll take a look at our meat exports as well here right after this. Well, we're back with you, and we're talking with Brian Hoops of Midwest Market Solutions. Now, Brian, we were looking at the grain weekly export sales numbers. Let's talk about the beef and the pork sales, shall we? And see what they were doing on the beef side. We had 13,300 tons from what I could tell. On the pork side, we had 28,700 tons. All in all, was that earth-shattering, or is that just kind of a mundane number on both of them?
Yeah, especially the pork number, it's really where we have been in the last several weeks, not moving to either above the average or below it. The beef sales are down from the last several weeks, and so a little bit of a disappointment there, but maybe not unsurprising as we go into the peak of the summer, and our not only our domestic demand but also our export demand has probably peaked here, and we could see both exports and domestic demand start to fall off a little bit as we get closer to this 4th of July holiday until we start seeing some Labor Day buying interest once again. Of course, cash markets fairly wrapped up for the week in the cattle country, a couple dollars softer in the Southern Plains, steady on a northern basis, and the cattle and feed coming out this afternoon. And it's not lost on the traders that we are likely to see an increase in placements for the first time in several months relative to last year.
All right, good point. And of course, the cattle on feed report will come out at 3 p.m. Eastern time today after the markets close up for the week. All right, well, Brian, thank you for all the information today. I appreciate that. We'll let you go, and I hope you have a good weekend. That's Brian Hoops of Midwest Market Solutions. Now let's go to the live cattle board. We'll see what the quotes were yesterday when we finished up. Let's take a look here. Well, it was interesting that we had everything beyond the June showing over $1 gain. We had the August contract actually $1.40 higher yesterday. It finished at 171.15. That wasn't that far from the high of the day. We had October up $1.72, so they had a strong close yesterday. Now the question was, could the feeders do it? Well, they sure could. Look at the August contract. It came back. It closed $2.95 higher at 230.67. September, $3.10 higher yesterday at 234.52. All the deferreds from September on out were over $3 higher. That was an impressive turnaround, but man, it has been a giant whipsaw week. Lean hog trade yesterday, they took the opposite direction, and August went down $2.80 at 89.97. October was down $1.20 at 79.85, so it closed under that $80 benchmark. So just something to keep an eye on. Keep in mind also the cattle on feed report that comes out a little later on today. They are looking for placements to be about 2% higher than what they were a year ago. So, Tammy, that'll be in the works later on this afternoon. We have that to look forward to.